हेलो साथीहरु नमस्कार, वेलकम अल अफ यु टु माई च्यानल। आजको डिस्कसनमा हामी चाहिँ इन्भेन्ट्रिज एन्ड कस्ट अफ गुड्स सोल्ड को बारेमा छलफल गर्नेछौँ साथीहरु चाहिँ। दिस इज द इम्पोर्टेन्ट च्याप्टर्स अफ फाइनान्शियल अकाउन्टिङ या एनालिसिस अफ अकाउन्टिङ इन्फर्मेसन वी क्यान से दैट। र फर्स्ट टर्म इन्भेन्ट्री भन्दाखेरि इज अल अबाउट स्टक अफ गुड्स व्हिच इज हेल्ड फर production or the selling purpose, right? When you look at the Dabur Nepal Co, for example, their annual report, you will find their raw materials, work in process, finished goods like that. And what may be the reason for holding inventory? You can say that transaction motive. Second is the precautionary motive, and the third one is the speculative motive. Now, what may be the terms of the sales? Terms of the sales, you can say that free and board based on shipping point. If let's see the exporter, just export to the responsible for exporting the goods to the shipping point. Let's see the Calcutta port, exporter of India for Nepal, then responsible for shipping point only, that is the Calcutta port. That is the case of your terms of the sales, free on board shipping point. Now at the same time, if that exporter export their product to Kathmandu, let's see, then Kathmandu is the destination point, free on board, that is based on the destination point. Now what about the inventory system? Our inventory system भनिसकेपछि you can say that is the perpetual inventory system and the periodic one. Under perpetual, we basically update our inventory on continuous basis, right? For which we prepare the stock ledger, and actually your company has a big investment to maintain the inventory system here, right? So you have to prepare the stock ledger, which details about your like your purchasing, sales, and the balancing part, right? Then what about the FIFO, LIFO and weighted average methods you can follow as per the given information. Now what about the periodic system? Under periodic system, we update the inventory only at the end of the accounting period, okay? Now for example, let's see the FIFO. Using FIFO, you are going to find the ending inventory value here. So you can say that is the simply based on your most recent purchase date, like your May 1st study, that is the most recent purchase date. Now based on the LIFO approach, look at your inventory units, and then you are going to value that units, that the ending inventory value. But in case of LIFO, we see that most earliest date, okay? Let's see the January 1st, February last, that could be the earliest date you can say that. Under weighted average price method, what we do, we find the first of all weighted average price based on the following using the following equation, like your cost of goods available for sale divided by total units available for sale. That's opening stock plus all purchase units is known as total units available for sale. The value is that the same opening stock value plus all purchase, that is your cost of goods available for sale. Now what about the inventory error, friends? Because we have to correct the inventory error. We are not entitled to show the wrong information to the investor or to overall stakeholders. So we have to correct the inventory because it would affect our financial statements. Either that is an overstatement case. If you overstate ending inventory, that means you would be deducting the more ending inventory that causes low cost of goods sold, right? Low cost of goods sold means, in that case, if you deduct the more like ending inventory, in that case low cost of goods sold, that results higher profit. This is not the good again. And if you deduct less, then in that case cost of goods sold would be higher, and that causes the lower profit, okay? That's why anyway we are not entitled to show the wrong information. Now what about the estimation of inventory? That is, we have a two approach here. So look at the given information first of gross profit, that is the simply net sales minus cost of goods sold. And under retail approach, friends, what we do here, that is at first we find the ending inventory at retail, first step. Second is that we need to find the ratio of goods available for sale at cost to goods available for sale at the retail, that is the cost to retail ratio, that is. And then finally we estimate the ending inventory, that is the step 1 and step 2. Now how can we forget about what about the practices of as for the Nepal Accounting Standard 04, and for which you could simply download the NAS-04, friends. Now it will details about what about the in Nepal, how we value the ending inventory, what about the practices by the company, like that. Now what about the financial analysis of the inventory? This is simply we can use the two ratio here. One is inventory turnover ratio. How we find it? This is simply cost of goods sold divided by average inventory. Then you can find the inventory turnover ratio. Higher the turnover ratio means that results load time required to convert the raw materials into sales. You can say that inventory to sales, right? So days in inventory is simply number of days in years divided by inventory turnover ratio, friends. Okay, basically what I discussed today, this is all about the summary of the content under the inventory analysis, friends. I believe that when you revise all this content, it could better capitalize your understanding level, and best way to practice and secure the good marks is to just practice, practice and practice, friends. Okay friends, these are the things that I would like to say today. If you like this content, please like, subscribe and also share my channel. Thank you.